This is Michael Kahn, and welcome to this week's video blog. Although both short-term sell signals are in effect, the market's pullback has not violated any major trends. More importantly, we have observed demand now spreading to all corners of the market, and many Lowry indicators are experiencing healthy surges. New highs in many of our indicators are inconsistent with major market tops, so we look at current weakness as creating better buying opportunities. Given our theme of awakening small caps, this week's video looks at several smaller stocks that appear to be emerging from their long periods of malaise. Not all subscribers have access to this feature, but for those who do, we can start by narrowing down the market to the small cap segment represented by the S&P 600. Activate the Indices tab and then S&P 600. Here is the screen that follows with the filter and sort function activated. I like to look for stocks that have already started to prove themselves but are not yet overextended. I filter for a power rating of 80 or less, but power rating relative strength are 10 or more. This way I get stocks that are not overbought but are still better than average. Once the list is ready, activate the View Charts button. First up is EchoStar from the Communications Equipment Group. The spike in the middle of the chart occurred when the company announced the merger with Dish Network. However, that is far enough in the past not to matter. And now we see price attempting to break out through an area of supply, while power rating, or demand, has already done so. That increases the odds for price to follow. At the bottom, a cross by relative strength above zero is often viewed as a good intermediate-term buy signal. Next is Redwood Trust from the REITs group. We looked at REITs before, but many still show this type of emerging pattern with power rating leading and relative strength rising. The setup here bodes well, although it is somewhat extended in the short term. Here is another example of a similar chart pattern. Sensient Technologies is in the specialty chemicals group and makes flavors and colors for the food industry. Again, we have a pattern with a breakout attempt led by rising demand and relative strength. Price has already made its move, so power rating can confirm the breakout with a new high of its own. The only caveat is a somewhat lower average volume, but that is not a deal breaker, especially for more nimble investors. As always, we encourage you to contact us should you have any questions by emailing LowrySupport@cfraresearch.com. This is Michael Kahn.